Hey everybody, welcome back to the channel. Today I'm going to go over the PM Silver Bullet session for June 28th. And we're going to go candle by candle, and we are going to hit the buy-sell buttons on TradingView and see what happens at the end and how to manage the trade if we get in one. So let's get started. This dark gray is the start of the 2 p.m. Eastern Time hour, the 2 to 3. So let's see here. We've taken out some liquidity here. Fail swing right here. There's a fair value gap right there. Let's see if it comes in here. Maybe we can take it long to go to this high here. See what that range that would be. That would be, 4. But you also got this fair value gap over here. So let's just mark this up here. Okay, so let's see if we want to go in and maybe tap back into this and come back down. But we'll see what happens here. Okay, so it's in that fair value gap right here. Okay, to go long, I'm not there anymore. It has to come back down here. Now, if it breaks this high right here, I'd probably be looking to go short if it takes out a market structure shift. So, kind of open at the moment, see what's going on. Let's see here. Alright, so that definitely is taken buy side right there. These two candles did by a tick, but I like to see it a little bit more, so that's definitely cleared now. Okay, so now let's see. For me, the market structure shift would be would be this one right here. As you can see, this right here is a short-term low as well. That's where this spike is, better than that one over here. So an aggressive entry, if I'm really looking for a reversal right now, you could use this as a short-term low. You have a fair value gap in here, a volume imbalance here. So let's mark the fair value gap out. Here's the volume imbalance. Let's mark that on here as well. Just mark that out like this. Volume imbalance. Okay, so let's see if it comes in here. You'd get in anywhere in here. It comes up into the fair value gap. I want to see it close in there. I don't want to see it close above though. Okay, so it is in the middle. So we would sell there, and I'd short at the bottom of the volume imbalance, which is the same as the fair value gap, by the way. It's just both of them is where I would be getting in. Stop would be above the high. That's the first candle of the fair value gap, and it's the high. So if it takes me out, then I know that we're still going long. But otherwise, if we're going short, that's probably a safe spot. But we can't always trade into this more. So right now it's kind of open, but I said I'd do the ones there, so I'm gonna sell 2 contracts there. And now I'd be looking, I probably want to cross these, a close below this for partials right here. So I want to put my line for partials on these relatively equal lows right there. So I'll do partials taken there. That means I'd be below this fair value gap, which would be good. And then I'd like to see that being, if it came down and then got partials, I'd be looking for this to be resistance to come back down. So now this fair value gap, we're just going to see how this plays out. Okay, we're just bouncing around up where we're at right now. Alright, that's good. That right there, my market structure shift. Now, where am I aiming for here? Why is it down here? Because I'm aiming for these two right here, or this one. Probably that one. Right, this one right here. So, go like that for that. 8. Okay. Alright, so you got a big candle here. Let's get a close down here. I'll take a partial. So we have another fair value gap right here. Now if it comes in the middle of this, I'll add 2 more contracts because we're still, you know, this is 8 handles. So that's more than 5. And we could be aiming for down these lows here, any of these 3 lows here. So it still would be a good trade. So if it comes back up in the middle here, this is a big fair value gap. I want to see the middle come in. I'll take a trade. All right, so just respecting that bottom of that fair value gap. Not a close below it. See, it is definitely respecting that fair value gap. Now, so if I was going long, why would I make a case for this to reverse on me and come up here? Well, I could make a case that this right here is a mitigation block. I could make the case of that being a mitigation block to go up, as well as a fair value gap. So you could see that as possible barrier to going long. So let's see. I would like to see it stop in here. If it goes above this, then you know we're mitigating our losses and probably getting out of the trade as soon as it crosses this fair value gap above it. Okay, we do have our volume imbalance and our fair value gap right there, but at the same point, this could be a mitigation block, a fair value gap. So you just got to be, you know, cognizant of what's going on with price action. So if it stalls here, I will take another trade. If it stops in the middle here, to go short, because I still think we're going short because we just took buy side liquidity. I think it's just engineering internal liquidity right now. So we'll see. And right, okay, I gotta sell 2 more contracts, like I said I would. Let's see how it goes. Oh, no. Okay, it's respecting the fair value gap, the higher one, and the volume imbalance. So it hasn't closed above those yet. Okay, so those held. These 2 original entries held. So that's good. Let's see how it plays out here. Okay, so I'm gonna do something different here now that I have 2 contracts on. I'm gonna take partials here when it crosses this one, this anywhere right in here. So anywhere in this area, I'm gonna take 1 off, and then I'm gonna take another one off here. I'll move this like this. So when I get a close around this, I'm gonna take 1 off. Another one, I'll take 1 off here and leave 2 runners. And yeah, let's see how it goes. We didn't close there. Close. Okay. Alright, so I can buy one contract there. Took one off there. I have 3 contracts left. My stops would be at break even, so let's move those here. Our trailing stop. Because we haven't taken our partial on our second trade yet. So once it stops here, then I'd be break even. So just the first one is at break even. Alright, so I got to buy another contract there. Now we're both at break even. One's a little bit in profit, one's at break even. And actually, if it comes back up and takes out these relatively equal highs, it's probably where I put my trailing stop, right above these equal highs. And let's see what happens here. Alright, let's flatten. Let's get both out there. Granted, it would have taken us out up here. Let's see how the rest of the time goes. Okay, right there. Alright, so $1,512.50. Let's take these off so you can see where the arrows are, the markings. Recap. We took buy-side liquidity here. We had a short-term low being taken. We had a fair value gap and a volume imbalance. We placed our order here. We had back and forth delivery. It finally took out a market structure shift. Came down here, respected this old fair value gap to go up. It came back up. We got in again because we still had our bias of going short because sell-side liquidity has been taken. And so once we came back beyond the fair value gap, closed below it, we took a partial, and then we took another partial down here, about 60% of both trades, close to it. So then we waited for our drawn liquidity, and once we hit it, we got out of our last 2 contracts. We trailed our stop properly to maximize our profit potential, and that's our 2 trades for the PM Silver Bullet on June 28th.